at least for me, to see this as not just the world is coming to an end, but as an investment thesis. In other words, crises create opportunities. And there's a potential here to get this right, and to make a lot of money and to be able to defend yourself and your family from what comes. There's a very positive side to this.
Maneco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with John Rubino. John Rubino used to own dollarcollapse.com. Now he's a Substacker. And John, he's written about 5 books, I think. And I'm surprised I don't know why I haven't had him on before. A lot of you have mentioned and asked me to have John Rubino on. So here is John. Hi, John. How are you?
Hi, Mario. Great to meet you. Better late than never. I'm glad we're getting together.
That's great. And first of all, I'd like to ask you, where do you see the world right now, especially the economy, the markets, the currencies, the dollar, of course, and yeah, where do you see things?
I think we're in a huge mess that has been building up over time and is finally coming to a head. We basically began an experiment in global fiat currencies in 1971 when we broke the final link between gold and the big currencies of the world. This handed the major governments basically unlimited credit cards, and they've been abusing that privilege ever since. So we're getting kind of what you would expect by handing an unlimited credit card to a bunch of politicians and their bureaucrats. We've got a world that is wildly over indebted. Governments running around doing things they would never be able to do if they had to actually, for instance, go get a bunch of gold in order to prosecute a war or start a new entitlement program or whatever. And so all of that debt is in the process of blowing up right now. And that's going to lead to basically the dissolution of a lot of these experiments that we've tried. Chief among them is, of course, the fiat currency experiment, but also the rule by expert experiment. We decided that objective rules were no longer appropriate for the world's governments, so they basically broke all the formulas that used to keep them in check, like constitutions and the gold standard and everything. So they're just out there putting every big system in the hands of PhDs with degrees from good schools and allowing the PhDs to do whatever they want. And they're making a mess of everything. So sorry, that's a long-winded answer. But the short version of that answer is that we're in big trouble financially, and we're going to see a series of crises going forward until the whole system dissolves and is replaced with something else.
Yeah, and you've, as I said, you've written some books. You've written 5. One is called Main Street, Not Wall Street. That's from '98. Then you wrote How to Profit from the Coming Real Estate Bust, The Collapse of the Dollar, How to Profit from It in '08. And the real estate one was in '03. Was a little bit ahead of things, but you got that right about the bust. The dollar, of course. Yeah, I think it's been collapsing in purchasing power, but it hasn't collapsed yet in terms of a currency that people still use. And more recently, though, you wrote The Money Bubble, What to Do Before It Pops. And the interesting thing you said there, you said that it's been building up since 1971. And I would argue as well that it's been building up since World War I as well, and when the Federal Reserve was created, especially here in Europe. A lot of the countries in Europe went off gold back in 1914 because to finance the war, they couldn't be on a gold standard. They had to print, and we never really went back. And it feels to me right now that everything is culminating, but I'm surprised they've been able to keep it going for so long. I remember back in '04, for some reason, I looked at one of these, a Bank of England banknote, and it still says, I promise to pay the bearer on demand the sum of £20. And I thought to myself, this is an empty promise, because I can't go to a bank and get 20 sovereigns for this. And I thought at the time, I think it was in '04. I thought this is all gonna implode, and it kind of did in '08, but they've restarted the system with all the QE. So yeah, how much? I know it's a difficult question to answer, but how much longer can they keep this going? And yeah, what are they gonna do, you think, to especially try to stop? We're seeing a lot of deflationary symptoms like M2 going negative, the most it's been since the early 1930s, and we're seeing a lot of banks starting to fail.
Yeah, it has gone on a lot longer than it should have. So I should say right up front that I thought things were going to end in 2005 or so. That seemed like the end of the road. And then we did get a big crisis. We had a near-death experience, but they've come up with some more tricks to keep things going for a while, to keep fooling us. But I think the biggest reason why it's gone on so much longer than seemed possible based on just rational numbers is that it's global. In previous currency crises, where countries decided to spend too much money and then debase their currencies and then have a currency crisis, there have been dozens, if not hundreds, of those throughout human history, but they always happened in the context of a sound money world. In other words, one country would screw up their finances, but everybody else would be on some version of the gold standard or just flat out using gold and silver as money. So they were all basically okay. And this one country screwed up, had a gigantic financial crisis, and then life went on. Well, now everybody is in the same boat with fiat currencies. They're all making the same mistakes. Their central banks are all doing effectively the same really stupid things with their money. But that makes the system a little bit more flexible in the short run, because if everybody's doing it, there are a lot more central banks out there able to have each other's backs and create lots of new currency to fool people, and it just goes on further than it ought to be able to. That is a very bad thing, because it has allowed us to take on more debt than you would normally think we would be able to. So right now you've got record amounts of debt everywhere you look, not just at the governmental level. Governments are massively over indebted. The U.S. obviously is the biggest debtor nation in the history of humanity, and Japan's government debt is higher on a per capita basis than any other society in history. But governments, in order to cover their own indebtedness, they've been encouraging corporations and individuals to borrow too, by pushing interest rates down to unnaturally low levels. That's led everybody to the conclusion that it's good to borrow because so much cheap money is available. So you have basically everybody indebted now. So when the breakup of the system finally comes, it'll be more catastrophic than it would have been otherwise. By the way, on dollarcollapse.com, I had a series for a long time called The Long Wave versus the Printing Press. And the premise was that there are all these long wave economic theories out there about 70-year cycle for this, or 50-year for that, or the fourth turning, or whatever. All of them saying that humanity goes through long psychological and therefore financial cycles, and all of them round about 2000 had us all at the peak of the cycle and headed back down into Kondratyov winter or whatever term they had for the really hard times that come from taking on too much debt. And it's 20 some years later and we still haven't collapsed yet. So I think that is why. It's because it's a global phenomenon, and that is allowing it to go on much longer than it should have. But the basic psychological and financial rules that apply to long wave theories still do apply. It's still a real thing. We still do tend to get overexcited and overconfident and take on too much debt and then suffer a gigantic collapse because of that. But this time around, it went on longer than it should have, and when it collapses, it'll be global, unlike past crises. So I think we're heading into one of those really fascinating periods of financial and economic history. Not fun periods. They're going to be terrifying. The things that happen will be terrifying and incredibly destructive and painful for most people. But for an economics nerd like me, it's a fascinating time because stuff like this has never happened on this scale before. And because of that, they're going to be writing about it. Historians will be writing up the events of this decade for at least another century or longer. This is going to be a time that's going to have a name. We won't know what the name is until much later, but it's going to be one of those things that everybody looks back on and says, "How could they have been that stupid?" You know, they really deserved what they got. And what we're going to get is going to be brutal and painful and terrifying for the vast majority of people.
Yeah, it's interesting you mentioned the year 2000, 1999, 2000, because you said a lot of people are calling for a turn down. But if you look at a lot of assets priced in gold, for example, the Dow gold ratio, it got up to above 40 back then, and it hasn't gone above that level ever since. So I think for those of us, I'm not sure how much you are into gold and silver. You probably look at them as real money as well. But to me, it feels like we're already having the deflationary collapse in terms of gold. And they've been able to keep things going because they fooled so many people into thinking that gold is useless and it's a barbaric relic. And people are not keeping an eye on the ball. That's the way I see it. Is that the way you see it too?
Yeah, with a fiat currency that isn't tied to anything real, and that you deflate or inflate a little bit more each year. In other words, lower the value of it. Basically, what you're doing is changing the yardstick that we use to measure economic value and the price of things. And so it's confusing to people. They don't realize that we are in, by some measures, a collapse already. And if you measure everything in gold and silver, in other words, in real money that holds its value, then obviously we've been in something like a collapse or a depression for the last 20 or so years. We're just not measuring it correctly. So yeah, I totally agree with you. And I am a hardcore gold bug. I'm obsessive about stacking gold and silver and accumulating junior mining stocks, especially. I think that that's a category that'll be like the dot-coms were back in the 1990s at some point, when gold and silver catch the attention of the broader investing public, and everybody tries to pile into these very small markets, and they send the prices of those things through the roof. Then the mining stocks are going to be especially interesting because there just aren't that many of them, and their market caps tend to be fairly small, and they tend to be very volatile. So I've kind of over the years built up what looks like an index fund now of junior miners, and it hasn't done all that well in the last few years, but I still expect them to do really well when things get really crazy out there and everybody's trying to pile into markets that are basically too small for the amount of global investable capital that'll be heading their way.
Yeah, I think today there's an announcement that Newmont is buying Newcrest for $19.2 billion. And could you tell us a little bit about what you see in terms of the majors? Because some people say that there's been very few discoveries in the last 20 years, and that they're gonna have to go after the junior miners. So do you think that that's one of the interesting things as well, aside from just being like the dot-com bubble where people just buy it because it says gold or whatever?
Well, that's what makes the highest quality juniors so interesting, because yeah, the big miners by and large are pulling more gold and silver out of the ground than they're discovering with their drilling programs. And if they keep that up, they basically just zero themselves out. They cease to exist by using up all their reserves, and then there's nothing left. And they obviously don't want that to happen, but they're not finding enough new gold and silver. So the only alternative for them is to go after the smaller companies that have found really nice deposits. So the exploration companies and the small producers that have gold and silver in the ground on a scale that will move the needle for a Newmont or one of the other big miners will become very hot properties pretty soon, because the big miners have no choice but to keep finding new reserves somehow. And the only way that's left for them, apparently, because they're not finding it through their own exploration, is to buy out the best juniors. So I think there will come a time when 2 or 3 big deals happen, and the really high quality junior miners get bought out. And everybody starts looking around and saying, wow, who's next? Who's the next Great Bear Resources or whatever, to name one that got bought out lately at a nice price. And then generalist money will start pouring in. In other words, people who just see the deals being done, see the momentum in a lot of these stocks, will want to buy that momentum without necessarily understanding how the business works. That is how financial capital flows work a lot of the time. If something is moving, people buy it because it's moving. And that phenomenon will happen in the junior mining sector in a really big way. And there's just so much investable capital out there in the world. I think it's still less than 1% of it is invested in precious metals. So even if 3% of global investable capital decides it wants to be part of the precious metals complex, that's a tripling of the money that is now in there. And that would send prices to the moon, because there just isn't that much there to buy. And if several more $1 trillion come in and try to buy what's extant right now, then the prices have to go way up to accommodate that new interest. And I think that's something that's highly likely in the future, just because of the dynamics between fiat currencies falling in value, which makes gold and silver, which can't be inflated away, more valuable, and then the big miners needing to replace the reserves that they're taking out of the ground. You put those two things together and you get an M&A boom in precious metals. And I think that's going to be one of the stories of the coming decade. And, maybe sooner than a decade from now, maybe just a year or two from now when it really gets going. So I think that could be one of those things where it finally starts making headlines and it becomes something, instead of a sideshow, it becomes one of the main things happening out there in the resource world. So hang in there. If you've got some underperforming junior miners, you're probably still going to be okay.
Yeah, a lot of the viewers ask what percentage, let's say you have $100 that you saved to invest, and I use 100 just to make it easier in percentage terms. If you have $100, what would you personally be putting? How much would you have as physical gold and silver and the miners? And yeah, if you could give us an idea. I know it's not the same for everyone, but what do you think would be a good strategy?
Well, if you're a typical investor right now, you probably have between 0 and 1% of your money in precious metals. And 5 to 10% would be not crazy going forward. It would be a defensible amount to shift into. So the first thing you should do, obviously, is to buy physical gold and silver, because that has a function beyond investing. That's the money that we will use if things get really crazy later on. So you want that as part of your prepping program. In other words, if you're getting ready for some kind of a crisis out there, whether it's environmental or a natural disaster otherwise, or financial or geopolitical, and there are enough things out there that could happen that would really disrupt our lives, that it makes sense to prepare at a basic level in general ways for those things. We can't know which crisis will happen, but something is liable to happen. So as part of that process, you want some gold and silver coins. You want some cash, national cash for whatever country you're in as well, because that's extremely liquid. But you want gold and silver as part of your cash hoard, because they are versions of money that won't go down in value versus the local currency. They'll go up and become more valuable. So there will come a time when you might want to use silver coins at the farmers markets, because you can get way more with those forms of money than with cash. So do that first. Buy enough gold and silver coins that you feel like you're covered for contingencies, and then look at things like the mining stocks, which won't just hold their value in the most likely scenario with the currency reset and rising inflation and all of that. the miners, if the best miners will go up dramatically in terms of not just local currencies, but in terms of gold and silver. They'll go up by some multiple of what gold and silver go up. So that's where you want to build capital, with mining stocks that have gold and silver in the ground and therefore have a lot of operating leverage. So between those two things, bullion and mining stocks, if you get up to 10% of your nest egg, then you'll probably be in pretty good shape for what's coming. Because having just 10% in something that goes up dramatically papers over a lot of losers in the other 90% of your nest egg. So I think doing that protects you against, your treasury bonds losing value, or your bank stocks tanking when the banking sector goes into crisis, things like that. And I think that's a place to start. Personally, I've gone a lot further than that, but I'm kind of an obsessive about this stuff. I don't think you want to follow my lead, because it involves taking too many risks that only an obsessive person would take. And you don't want to do that. You want to stay diversified, but you want to add more to the sectors that you've been neglecting, which are probably precious metals at this point.
Yeah, I would say I'm more like you, obsessive about. I have been since 2002. But the other thing I'm concerned about, though, right now, John, is that there's so many things out there, so many potential crises, that it's really worrying. Even to have mining stocks, for example, we're hearing that people are saying, "Oh, countries are going to start nationalizing properties because." Commodities and precious metals are going to become worth, very valuable. We've got the geopolitical tension going on. We've just seen Zelensky come to Europe, and we're still handing him billions and billions in arms to keep fighting the Russians. And then we have the banking crisis that erupted in March in the US and in Switzerland. And we have also the debt ceiling impasse. So maybe if you could go over those and tell us about how you manage your, let's say, your risk, the risk of your portfolio with all that's going on, in a way that is not like, well, I'm going to liquidate everything, put everything into gold, because I'm really worried about everything. Yeah, maybe if you could tell us your strategy for such a turbulent world.
Well, you're right that there are a lot of things that could happen. And we can't know which one is going to happen, but some big bad thing is highly likely in the not too distant future. So yeah, this is a time for risk avoidance. There are times, for instance, when interest rates are low and the central bank is pumping out huge amounts of new currency, that being aggressive makes sense. In other words, buying risky stocks, for instance, on the assumption that all that new liquidity is going to come in and push their prices up. And you'll make money with your speculation. This isn't a time for that kind of thing anymore, because there are so many potential crises. And all you need is one to mess up an aggressive stock portfolio, for instance, that you want to be doing things now to minimize risk. And that would be, look at the things that are most at risk in, for instance, rising inflation. That would be, for instance, government bonds and junk bonds and things like that, and bank stocks. You probably don't want to be in those things, because they are dependent for their value on the value of the currency. And if we're in a situation where we have no choice but to inflate away our currencies, then that's bad for those kinds of financial assets. So you want to shift out of those and towards real assets, things that can't be created on an electronic printing press and therefore inflated away. And that's, if you look at what the billionaires are buying right now, they're snarking up all the farmland that they can get a hold of, because one of the major crises that we may see in the not too distant future is a supply chain crisis involving food. And there might be food shortages. Well, if Bill Gates owns 1 million acres of farmland, then he gets much richer because he's supplying something that's in shortage. So if you can do that, if you can buy really well-chosen real estate, especially food-producing real estate, that is a diversification into something that will probably hold up pretty well. But there are a lot of lifestyle choices that you maybe should be making now too. And the biggest, most general one is under the category of prepping. Just look at what you need to be ready for some kind of a crisis, even though you can't predict what the crisis will be. And that's basic prepping. Get some food on hand, have a garden so you're relatively food self-sufficient if you can do that. If it's not too scary, be well armed. Buy that gun finally and learn how to use it, and just generally start embedding yourself in your community, because nobody is truly self-sufficient if they're alone, and nobody's truly covered in a crisis if nobody's watching their back. So you want to be part of your community in a way that that is reciprocal. You have connections and relations with people around you, and they can count on you, and therefore you can count on them. And I think we haven't really done that as a culture. You see these stories about how many people have one friend or fewer, and how loneliness is a big part of most people's problems right now. And that's the kind of thing you want to address. I mean, you should always address that. See, most of this stuff, most of prepping is basic common sense that we should have been doing all along and we drifted away from. And embedding yourself in your community is one of the really big ones. I mean, we should be in organizations that give us human contact and create friendships. And it's easy to drift out of that because you can live so much of your life online now that a lot of people they're at risk from, the health problems that flow from being lonely, leaving everything else aside. It messes up your health if you're an isolated person. But it's also incredibly dangerous when you're heading into some kind of a crisis, because there's no way you can completely protect yourself without help from other people. And not knowing exactly what the crisis is going to be, So I think that's the biggest single thing, beyond buy some gold and silver, is become a part of your community again, one way or another. Just make sure that you're around people and that you're helping people, and that those people will be there to help you if the time comes. Basically, what we're doing with all of this is getting back to the lifestyle that we should have always been leading. The fiat currency / internet era has been a time of extreme unhealth for a lot of people. We've learned to live in a way that's not good for us. And if that's ending, then we need to go back to the old ways of living where you're part of a community and, you've got a garden, things like that. So I think that that is, in a general sense, the direction we should all be heading. And even if this whole gloom and doom thing turns out to be completely untrue, and there are no big crises coming, and we get through this financially and geopolitically with no trouble, we're still better off if we prepped in this way for a crisis, because we'll be happier and healthier regardless of what happens.
Yeah, it's almost like slowing down a little bit, because like you said, with the fiat currency world, internet, and low rates, everyone wanted to buy a big house, a new car, and yeah, maybe that's not the right way to go about things. What do you think the end game will be like? Will it be a deflationary collapse, or a hyperinflationary collapse? And I feel that either one, you want to have gold and silver, because if you have a deflationary collapse, the currency just there's going to be so many bankruptcies, and there won't be any cash around except for gold and silver. And in a hyperinflationary one as well, the value of the currency just collapses. So how do you see it, and do you think it matters which one we get?
Well, I think either one is possible, because we haven't yet made the decisions that will bring one or the other about. For instance, if we keep raising interest rates and keep tightening, then we run the risk of, like you said, mass defaults and bankruptcies everywhere you look, and banks, half the banking sector ceasing to exist. That's a real possibility if money gets tighter from here. On the other hand, if they stop tightening and start easing again, then inflation is liable to come roaring back. And we're going to know that there's no way to fix it, because we tried to tamp down inflation in 2023 and it didn't work because all the banks started failing. And so from now on, we just have to accept higher inflation. Well, that's part way to hyperinflation when you accept 4, 5, 6, 7, 8% inflation. So that's possible too. And you're right, gold and silver do fine either way. Gold and silver actually got more valuable during the Great Depression, which was a deflationary time. So we can't know which of these is going to happen. I kind of tend to think that a massive inflation is more likely, just because governments do have unlimited printing presses, and they're going to respond to any kind of a financial problem or a geopolitical problem with a printing press. They're just going to print as much new currency as it takes to bail out whoever needs to be bailed out. And that's eventually going to destroy the value of these big fiat currencies. So I think that's more likely. But it's not a guarantee yet, just because they really do want to squeeze inflation back down to 2%. And to do that, you have to accept an awful lot of pain out there. So it's possible they overreact and give us a gigantic debt default crisis, which will be very deflationary. Yeah, you just can't know. That's why we should be doing the general things that will tend to be okay no matter what. If you've got a garden, you're not going to be sorry you have a garden regardless. And if you've got gold and silver coins, there's probably no generation in human history that was sorry they had gold and silver coins. That's just something that doesn't happen in human society. So you can load up on precious metals while doing all the things like storing it safely and carefully and everything that you should be doing. You can do that, and it's highly unlikely that you'll be sorry that you did it. So it's a good idea to focus on things that will probably work out regardless, and accept that you can't know for sure which fork in the road that we take, whether it's the 1930s style deflationary depression or the Weimar Germany style hyperinflation. Either one of those are still possible. So do the things to prepare that will probably work either way, and you'll more than likely be okay.
I wanted to cover the situation with the debt ceiling, because we're seeing news that they're beginning to maybe agree with each other, the administration and the Republican Congress. And just wanted your view on this debt ceiling impasse, whether it's just another distraction, and eventually they'll raise it, and it's gonna. We're still seeing, I think the CBO is projecting 46 trillion debt held by the public by 2033. Right now, I think it's about 24.5 trillion. That's not the whole debt, is just held by the public. So just wanted to see the way you're looking at this crisis, and if there were to be a default, how do you think that would play out in the markets?
Well, let me start by saying that in a healthy society, the debt ceiling should be zero. There should be no government debt in a society that's managed correctly. But we're so far gone now that there's no way that you even limit the increase in government debt, let alone start cutting it, because to do that would require that you would cut Social Security, Medicare, and or the military budget. And there's no appetite for anything like that in Washington right now, because we have a whole generation of politicians who have never had to say no to their major constituents. They could start, and fund cradle to grave entitlement plans and a global military empire at the same time, because they could just make the money up out of thin air. And so these guys don't have anything in their adult lives that have prepared them for saying no to a major constituent and telling them they can't have what they want. So that'll never happen. And the debt ceiling thing, started out with a good idea. It was designed to make it painful to borrow more money and in that way limit government spending. But it hasn't worked out that way because we can't limit government spending. So everybody they do some theater, and they pretend that they care about government spending in order to go back home and say, look, I'm trying to cut back on big government. But none of them really care. Republicans or Democrats, they would never, if they actually had a chance to cut government spending by 5% even, they wouldn't take it, because they know they couldn't get reelected if they did. So this will get solved. They'll do something that will let the government go on borrowing. And then we'll be back where we started, with too much debt accumulating at too fast a pace and a gigantic crisis looming out there. So I don't think there's any way around that. And I think they will solve the debt ceiling debate pretty soon. We'll get a relief rally probably in the financial markets. And then, we'll go back to realizing that we're in big trouble. And I think the markets get very choppy and very volatile with a bias to the downside from then on until the Fed starts easing again, which I don't think is going to happen this year. I think they'll stop tightening pretty soon. But I think going back to easing is going to take some kind of a big crisis. So when the big crisis comes, we go back to 2010, 2011 kind of monetary policy, but not till then.
Yeah, and it's interesting you said that it doesn't matter what party is in power, they always increase spending, and I listened to Kevin McCarthy. I think he spoke to the New York Stock Exchange recently, and his plan was not to cut either. It was to increase by discretionary spending by 1%. So yeah, they like to increase spending. So John, any final words to the viewers? What you think is the most important thing, not just in terms of financially, but people's mental health and how to deal with all the bombardment of news and crises that is going on out there?
Yeah, the mental health side of this is a very big deal, because listening to an interview like this, you could be kind of freaked out, right? Because it sounds like the world is coming to an end and we've got every kind of disaster you can think of, and that's all true. We do have lots of disasters that are potentially coming. But it helps a lot, at least for me, to see this as not just the world is coming to an end, but as an investment thesis. In other words, crises create opportunities. And there's a potential here to get this right, and to make a lot of money and to be able to defend yourself and your family from what comes. There's a very positive side to this. For instance, there's that movie, The Big Short, that everybody should see if they haven't already, which is basically a story similar to what we're talking about. Some guys saw that there was a crisis coming, and they placed a big bet on that crisis. And while everybody else, when the crisis finally came, everybody else was losing money hand over fist, they were making a ton of money. They made life-changing money by betting correctly on the crisis that was coming. And then going further back, during the Great Depression, fortunes were made by people who anticipated the stock market crash in 1929, and what happened after that. So we can be among those people who get this right, and then we can be there to protect our friends and family, and to provide capital for the rebuilding that's going to be necessary after the current system falls apart. So this is something that can be incredibly good if you get it right, and it could be healthy psychologically, because you're working on a positive project for a goal that is important and great if you can pull it off. So I think that's the way to approach this. Don't think about the bad stuff other than the implications that they provide for the financial markets and for your life in general. And then proceed accordingly. Do what you should be doing to protect yourself, and to maybe exploit what's coming.
Great, John. Could you tell us before we wrap up where the viewers can find your work right now?
Yeah, I run a Substack newsletter, and it's at rubino.substack.com, and it focuses mostly on actionable stuff. In other words, okay, all this bad stuff is coming, so what do we do? And I just started a new series called How to Become Invisible. In other words, everybody's spying on us. What can we do about that? How can we kind of disappear from the eyes of all the people who are trying to control us and spy on us and exploit us? And so that's what it's about, things like that, things we can do.
Great. Thank you very much, John, and I wish you a great week ahead.
Thanks, Mario.